Welcome to the Market Update Desk, August 11th with Scott Riley, NMLS 157524. Start a new week. We got through last week and it was a very pleasant surprise. It was very tame. The market stayed in a very narrow range. So without the trove of data last week, it was actually very pleasant because it was very nice and steady. This week, we get some very important inflation data. So let's go over what happened this weekend with a couple pieces of information and what's on store for the week. So over the weekend, Fed Governor Bowman, wow, is she done? She's done an about face in the last 4 months, I would say, turning from one of the biggest hawks to significantly on the Dove side. She's finally paying attention to the employment component of their dual mandate, and it is nice to see. So she came out and said the latest jobs data reinforces her view that the Fed should cut rates not once, not twice, but 3 times this year for a total of 0.75%. Now, could that be three-quarter drops in successive months? Could it be a half point drop like we saw last October, followed by a quarter drop? It's we'll have to pay close attention to it. She also highlighted that several of the points that we've been bringing up. Unemployment, number one, that rate has gone up and it's just a whisker away from 4.3%. And the average job growth over the last 3 months has only been 35,000. Now, keep in mind, that's not even including the second revision to May, and there's 2 revisions left for June. I'm sorry, one revision for June and 2 for July left. Sorry about that, had a little technical glitch. She's arguing, for the first time I've seen it, that waiting too long to adjust rates could cause more problems in the future, damaging employment even more. Now, the Wall Street Journal wrote a piece that there are now up to 10 candidates for the open Fed position next year, or maybe before. We don't know. We know some of the cast of characters, but there's new ones that have come to light. Former St. Louis Fed President James Bullard, he's definitely been one that likes the spotlight. And Mark Summerline, a former George W. Bush consultant. And we know the 2 Kevins, Kevin Warsh, Kevin Haslett, Walter Moran, and maybe Michelle Bowman. Now, also, we did on Friday get the name of the replacement for outgoing or vacating Fed Governor Kruger. That is going to be Stepen Miran. That's going to be a positive vote in favor of rate cuts. Now, the big 2 items this week, the main one is going to be CPI, Consumer Price Index, and the headline reading for July is expected to come in somewhere between plus 0.16 and plus 0.2. Its replacement number, though, that's leaving is 0.14. So while the numbers could come in theoretically tame, we likely are going to see an increase on year-over-year headline going from 2.7 to 2.8%. Now, the more important core is expected to be reported at 0.24 to 0.3%. There's also a challenge with the outgoing replacement number, which was a very low 0.19. So making it very likely we're going to go from 2.9 to 3%. But understanding why these numbers are going to increase year over year is important, because you're going to see the media talk about that we're getting hot on inflation. The main reason is because of the outgoing replacement numbers. Now, something that we're hoping for, but we don't know, shelter costs. The last report was fairly tame at 0.18%, but a big reason for that was the lodging away from home. That came in at a negative reading. So we hope it's because shelter makes up 44% of the total CPI. If we can get a little bit of relief in the shelter cost, it could balance out the effects that we're going to have from the outgoing replacement numbers. Now, this week, we rev back up with data, and some important ones. Like I said, yesterday or tomorrow is going to be CPI, and Then Thursday, we're going to get PPI and jobless claims. Then Friday, we're going to get retail sales and industrial capacity and utilization. Looks like the 10-year right now I'm looking is sitting at 4.2655. We've been staying in this narrow band. Mortgage-backed securities have bounced down against some beneficial resistance for the market, but it's bounced off there for 3 or 4 trading days. So we need to make sure we stay above the current resistance level because there is a drop after that. We'll keep you updated with information tomorrow as CPI breaks and then a more detailed in the afternoon. Scott Riley, the Market Update Desk, 616-293-2189. Have a great afternoon.